So it is true that the Fed basically sets the rate in which banks are able to borrow from, like big institutions, right? But what sets your mortgage rate or your car note is more sort of where treasuries are trading at, right? So there are these bonds, US treasuries, right? And how a bond works is the payout is a yield or a percent, right? So the less attractive the bond is, right, the higher percent you need to offer, right? So the more risky a bond is seen, the higher percent you need to offer for people to be interested in buying that bond. So what could happen, right, is that if Trump messes with the independence of the Fed too much, he could actually have the opposite effect. So even if the Fed lowers rates, right, if the global economy, right, doesn't want to buy our bonds as much because they don't see us as stable, the price can actually go up, not down. And that has consequences all across our economy. Here at Farpoint Global, right, we will lend capital, right, to help execute a trade. But if the bond rates go up, right, our rate to our customer has to go up because our borrowing cost is higher. Everyone's cost goes up, right? If the bond rates go up, your mortgage goes up, your credit card rate goes up, right? So it's not as simple as Trump can just demand the lowering of the rates and everything else will follow suit. That's not the system that we're in. Again, we operate in a global economy. I really hope that the market starts signaling a little more clearly to Trump that this is a mistake. Go through the normal process of appointing Fed governors and chairman of the Fed when their terms end, and do it the right way and hold the independence as a primary concern in your head. If we don't do that, we're going to be no different than some of these banana republic-y countries. It is critical to the supremacy of the US economy that the Federal Reserve remains independent. Like and subscribe. Your margins will thank you.